One activist investor is avoiding the Big Apple's office space market amid Zohran Mamdani's win. John Litt is the Land and Buildings founder and chief investment officer. He joins us here on set. Jonathan, great to have you with us. It's not just New York City, it sounds like. You don't have any position at all in office space. Why is that? Well,
if you recall, back in 20, we came on after the pandemic and said work from home is going to be a problem.
Right.
And we said stay alive till 25. Now we're in 25. And alive, for those people that survived, is about as good as it gets. It's not thriving. And whether it's Mamdani here in New York that it's a concern, or it's work from home continuing, there's been some recovery, but it's still a problem. And now we have AI. And, you know, Barry said it and stole my thunder a little bit, but AI, I think, is the next challenge for office. What's going to happen to those empty desks and empty spaces as they come up? And I think it's a real challenge that lies ahead.
I mean, when you think about how it's going to shape up, given AI and given the job losses assumed from AI replacing humans, do you think the next position you would take in office real estate would be a short?
Well, you know, we're looking at it, and the market has stabilized to quite a large degree. The area where we're still short is in the office lab space. And despite some of the damage that's been done in that space, there's still a lot of challenges ahead, and we do remain short in that space.
I think you were short in Alexandria Realty when it was a triple-digit stock. I think it's trading at 15-year lows, disastrous quarter. You stay short this thing, and the move to the downside has been dramatic.
You know, it's a great question. I came on in 23 to talk about Alexandria. Stock was 120. People thought I was crazy. All of our research said people aren't back in the space. And when those leases come up, they're not going to renew. And Alexandria is now seeing that. They're not renewing. They can't lease up their development assets. And the stock's gone from 120 to 50 and change. And so this happened more recently, you know, another $20 down. And so we went back and said, maybe this should be a long. Maybe we should look at it from the other side. We went back to the people we spoke to when we put the original short on. And they said, John, I know why you're calling. It's a bloodbath out there. They said, it's worse than you can imagine because we own assets, billions of dollars worth of assets. We can't lease it. And the cost to put a tenant in, if we find a tenant, is so great, it doesn't make sense. We're more inclined to give the assets back. And as we thought about that, we said, you know, the problem is going to go from a leasing problem to a balance sheet problem for Alexandria. They have a very highly leveraged balance sheet. They have huge capital commitments on the development program. They have an overpaid dividend. They're going to have to cut or eliminate the dividend. And they're going to have to sell assets aggressively or sell equity to keep the balance sheet afloat and keep the company afloat. And so I don't think the story's over on the short. And, you know, we might be wrong in the short term, but I think it's going to be a challenge for them.
I want to ask you also about a stock that had a huge move in today's session, CSR, Center Space. It confirmed that the board initiated a strategic review that may include a sale, a merger, business combinations, or just going along with its existing strategy. What's your thesis here, and what do you anticipate?
So if you zoom out and think about REITs, they've been trading at big discounts because of the Fed tightening, and that's persisted. Apartments is the hottest area for institutional capital to get invested. I don't want to say the hottest area, but an active area. This company was trading in the $50, $60 share range, and they've now announced strategic alternatives. One analyst after the market closed said it's worth $85 to $95. These companies are either going to go private or the stocks are going to recover. This will be the third apartment REIT this year that has tried to grapple with this, and the other two liquidated. Last year, we had activist campaigns in two companies that Blackstone bought in the residential space. I think it's going to continue. I think this company will be sold in short order.